Hey, I'm Adam Jusko, and this is Stock Screamer. We are halfway through the week, and it has already been very eventful, even with a day with the stock market closed today. What is going to happen on Thursday? We're going to talk about it, but first I would ask you to please subscribe to our YouTube channel if you have not already. And if you're one of the very few that already has, I thank you so much. Now, we have had sort of a dizzying week in the stock market this week. On Monday, we had the big jump. Everyone was all excited that Trump and the Chinese what is he, the president, the premier? I don't really know, to be honest with you. Anyway, everyone was very excited that Trump and the leader of China had come to not so much of an agreement on tariffs, but at least an agreement to not do anything worse than they'd already been doing and to talk about it for a while. So everyone got very excited. And the stocks went up as a result. And then Tuesday came, and people suddenly weren't feeling very sure of whether that tariff deal really was any sort of agreement, or if it really just meant, well, we're going to wait, 90 days or whatever, and then we're going to just do what we would have done anyway. So it didn't really feel like maybe it was as much of a breakthrough as it had been, and stocks started to go. And even beyond that, there was the news of the yield curve flattening or inverting on bonds. Now, many people have no idea what that means, and is not an easy thing to explain in few words, but basically what it means is that the bonds that were being sold to hold for the long term, the yield on those bonds, what you were going to get back from them, was actually potentially going to be less than what you could get on a bond that you held for a shorter term, which normally that is not how the way it works. If you lock up money for a longer term, you should be getting a higher yield, right? Sort of like if you bought a CD, you expect your CD, if you hold it for a long time, you're going to get more money than if you hold it for a shorter time. So when you have the yield on a bond in such a state that the long-term bonds are actually giving you a yield that is less than the short-term bonds, or at least they're very close to each other, that is sort of what it means by a yield curve flattening. And what that means is the fact that there obviously are enough buyers in the market that are willing to take that lower yield on the long-term bonds, because of the fact that they must have some fear that they should lock in that lower yield, even if it's a worse outcome than the short-term yield, because they're sort of betting that the future is not going to be as good, right? Otherwise, they would take the short-term bond, take the higher yield on that, and then, when that came to maturity, just put it back into the bond market again. That would be what would make sense in a normal bond market. When you have the yield curve flattening or inverting, which means the yield on the long-term bond is even worse than on the short-term bond, that's when you have the inversion. When that starts to happen, then that shows that there are institutions in particular that are starting to believe that we may be headed into a place that is not very good. And in fact, in the past, especially in the past 50 years, when this yield curve has flattened like this or inverted, it has been a sign that a recession is coming, not necessarily immediately, but in a somewhat predictable time frame, or a somewhat short time frame after that happens. So this could be a sign that we are getting into this place. So obviously that is something that upset some people as well, and so could be another reason that you saw such a drop in the stock prices yesterday. So then we come to today, a day when the markets were closed in remembrance and salute of former President Bush. We now are sitting here with a state where maybe it gave everyone a chance to sort of catch their breath, think about other things than the stock market for a day, and we'll see where we are tomorrow. The stock futures, the last I looked, showed that things were expected to be up tomorrow, but we will see if that is actually sustainable or not. So we're in kind of a strange place. We have indications of a slowdown, that bond yield situation definitely being one of them, but at the same time we have things like unemployment still being very low. There are some signs from what I've read that holiday sales look like they're pretty good this year. The Federal Reserve's Beige Book report came out today, which for the most part seemed to show that things were humming along okay. There were maybe some signs of weakness here and there, but for the most part, it seemed like things were doing okay. There was some, complaints that, maybe some companies couldn't find enough workers, But that's not necessarily something that would make you think the economy is in a bad place, because we have such low unemployment. It is difficult to find people to fill some of the positions that are out there now. So you look at it overall, it's hard to see where we are at. There are so many different factors sort of competing there, and maybe that's why we have had, you know, such volatility in the stock market recently, because, you know, there's good news and then there's bad news and then there's good news and then there's bad news. And we had such a long period of things just kind of sailing upward that now we're getting to a place where we're at a little bit more of a rocky road. So for me, you know, I'm holding what I have, probably going to wait out these next couple days to see what happens and see if it looks like this is just more kind of bumpiness, or whether something you know, bigger is afoot here. But I don't necessarily see any great short-term opportunities, because the market feels so unpredictable right now, unless a really awesome company you know, really has a free fall here in the next couple days and opens up an opportunity that you can't miss. For me, it feels like a place to kind of stand aside for a couple days, let the weekend go by, and you know, sort of reflect on it for those couple days. We would be interested to hear you know, what your plans are, what you think of where the market is and where it may be going. Put them in the comments below if you have them. Otherwise, I thank you for watching, and we'll see you next time.